What's happening? What's happening? What's happening, everybody? What's going on? What's going on? I'm going to give it a couple seconds just to repopulate on my other computer here, make sure we're working. Then I'm going to check the sound, and then we'll get going. If you guys can hear me, go ahead and drop a 1 in the chat. That way I can get started. If you guys can hear me, let me know. And I'll get rolling. I got a couple things to discuss today. I just literally got stopped out of one of my trades like 2 minutes ago. So I'm going to break down that trade I got stopped out on. I'm going to go through a structure-based trade, a free space trade, a couple of advanced patterns, and then a few different topics that I think you can implement into your trading to make you a better trader today. So Aaron says he's good. Wayne says he's good. Jordan says he's good. All right, good deal, good deal. First things first, before we get started, obviously my name is Drew Bishop. I'm a trader, an investor, and an entrepreneur. And for those of you who have not had a chance to meet, welcome. Thank you for coming to the stream. Nice to have you here. And how this is going to work is basically I'm going to break down a few pairs, a few different things I'll be looking at, talk about some of the trades I'm either currently in or was in earlier this week or something I'll be looking for. And then if you guys got any pairs or any questions of anything you guys want to see, then you can just stop me whenever and type in the chat and I'll break it down. And these streams kind of are what you make them. The more you guys want to talk, the more you guys want to go through things, the longer they'll be. If it gets quiet, we'll probably just end up ending early. So feel free to be as vocal as you want to in the chat. Jonathan's here. What's up, man? Good to see you. So before I get started, I want to talk on two different topics. Okay. Topic number one is the way I trade. I will trade free space, which is basically trading with momentum. Could be a pullback trade, something like that. I trade around structure, which is if we're at support or resistance, I'm looking for relief. And then I trade advanced patterns, which is going to be more about consolidation. So I try to trade momentum, relief, consolidation, and short. Doug, what up, man? And long story short, just so you guys are aware, before I get into the actual chart work, you have to understand the foundation of beliefs behind the chart work. And my foundation of beliefs is that it's all about probabilistic thinking based about Mark Douglas's teachings, right? So if you've ever read Trading the Zone, I'm sure you're familiar with the topic. But long story short, the probabilistic thought process is basically about creating a statistical edge and then exploiting that statistical edge over a series of trades. Now, I'll never go all in on one single trade, on one single pattern, because I never know the outcome of the trade, right? It's completely random. But what I can do is if I trade the same way consistently, I can put the odds in my favor to have that statistical edge. So anything I talk about today, I hope you guys don't take it as a one-time signal or an all-in type trade or all margin, whatever you want to say, right? It's just one small piece of the puzzle, and we like to call in our program is one weighted coin flip, right? You're trying to create a coin that has a weighted side to it. You flip it, have that statistical edge over time. So before we get started, does anybody have any questions or pairs that they want to see broken down first? Like I said, I got a couple things I'm going to break down. But I'll leave it up to you guys first. Is there any questions about anything anybody wants to see or any pairs anybody wants to have broken down? Could be a indice, could be a commodity, whatever you guys want to do. So I'll give you guys a second to see if anybody types anything in, and then we'll get rolling from there. Then we'll get rolling from there. I'm looking forward to the March Madness starting, man. I'm ready. My Memphis Tigers, they barely skated in there, but we made it. I think number 9 seed, something like that. Got Boise State. We're going to beat Boise State tomorrow and then beat Gonzaga the following day. So y'all get ready for it. Y'all get ready for it. Doug wants to see US 30. Of course we can look at US 30, man. It's a price chart. Of course we can do it. Let's check it out. Jonathan says, EJ. I got you, man. I got you. All right, so let's do US 30 first. And let's go full screen. And for the most part, right, if you were here last week on my process, it's going to be a 3 time frame process. The daily time frame, the 4-hour time frame, the 1-hour time frame. Daily time frame, I'm trying to do one thing. If anybody remembers from last week, what is the one thing I'm using the daily time frame for? And then Ruben wants to look at gold. I got you, Ruben. Anybody who remembers from last week or anybody in Bish Capital, what is the one point of what I'm using the daily time frame for? For one reason and one reason only. I'm using the Mr. Lee says, how about gold? Yeah, we'll do gold for sure. We'll do good. Doug says structure zone. Yeah, so the only thing I'm using my daily time frame on is basically to identify my locations, right? I want to identify what is my bias. I want to look long or do I want to look short? So in this case, what up, Marshall? So in this case, we're trading at resistance, right? So if we're trading at resistance, I know we're trading at higher time frame structure. to tell me that when I drop down to the 4-hour time frame or the 1-hour time frame, I want to look short, right? No opinions here. So a lot of times in previous days or previously in my trading career, I would say, hey, I see 2 big bullish candles here in the daily time frame. I want to look for a buying opportunity because I see something like that, right? I don't want to be analytical. I want to be systematic. And the systematic process tells me if I'm trading at structure, that's what creates my bias, right? In this case, we're trading at resistance, so that's what creates my bias. I'm not using my opinion here. I'm using my systematic thought process. So dropping down the 4-hour time frame, I'm looking for a selling opportunity only. And Doug, I'm sure I know what you're looking for. So first things first, good news is we see some decent momentum, right? We see some decent momentum, a pretty clean push. So the first thing I like to do is look at this clean push and say, hey, where does the opposing pressure really come in? Because I'm going to use that to get out of the market. So looking at this move here, I'm going to break it up into really 2 different things. One push is right about here. The second push is right about here. So I can now zone this little level out to do what? Take it as potential targets, right? Take it as potential targets. So looking for that selling pattern. So far, obviously off of this, there's nothing here. Some people can say there's some good rejection here, some good rejection here, whatever. I don't want to be analytical about my decisions. I'm looking for one of 2 things for me in my personal trading. I'm looking for a double top or a head and shoulders. The double top is my relief patterns. The head and shoulders is my reversal patterns. In this case, I got nothing here, right? So what I can drop down to now is the 1-hour time frame. All right, dropping down to the 1-hour time frame. Let's see what we got. We've got that high momentum push. We've got potentially a left shoulder here. Push above, making the head. Come back down, retest the neckline, making the right shoulder. And then, Doug, what happens here? Based off the rules to the pattern, right? Based off the rules to the pattern, Doug, is this a valid head and shoulders or an invalid head and shoulders? And that's something most of you guys will see, whether you've been a part of a trading program or not, or you just watch YouTube videos, you consume content online, whatever it is. You'll see some things that some people trade that they might trade well, and then you'll see another person talk trash about that pattern, right? You'll see somebody trade this strategy, and then you'll see somebody else tell, hey, that trading strategy doesn't work. And what I would just always suggest you to do is to test it for yourself. Go collect the data around the rules that you see the pattern with, and then collect the edge based off of that. And then let the numbers speak for themselves, right? Don't let your opinion do it. And Doug says it is invalid. Yes, the pattern for us is invalid based on the rules. So there's nothing I can do here, Doug. So based off this US 30 analysis here, I still am potentially expecting some relief to come out of here. But based off the pattern formation, it's not a valid pattern to me. So I can't just emotionally trade it now, right? So the only thing I'll do with this pattern or with this pair is put it down in my journal here, right? US 30, trading at daily time frame resistance. I'm looking for a relief pattern or a reversal pattern. The 1 hour was invalid, potentially have something on the 4 hour time frame. Okay. US 30, nothing we can do here, right? We've identified 2 things. We've identified that we want to look for a selling pattern. And if we do get a selling pattern, here's where we want to take off our targets, right? So now it's just a waiting game, right? I'm not going to analytically try to find some other way to get involved. I'm not going to start building a case for why I should get involved based off this candle. I'm looking for specific things each and every day to exploit an edge. If it's not there, on to the next. If it's not there, on to the next. So let's go do gold real quick, and then we'll do EJ. And then I'll get into some of the stuff that I've got, on my radar. Any questions on US 30 there, Doug? Is that good? All right, same thing. Looking at gold here. Looking at gold here. So the first thing we're going to do is let's identify some structure zones, right? Identify some structure zone on this daily time frame. I've got a resistance here. I've got a minor resistance right here. I've got some support right there and support a little bit lower. Okay. So we are trading at daily time frame minor support. We're trading at daily time frame minor support. So based off the systematic process, if I drop down to the 4 hour time frame or the 1 hour time frame, should I be looking for a buying opportunity or should I be looking for a selling opportunity? Type it in the chat. Type it in the chat. Let's see who's been paying attention today and last week. Daily time frame, the higher time frame, we're trading at support, which shows us buying pressure, right? It shows us previous buying momentum. So now that we're trading at this level again, when I drop down to the 4 hour time frame or the 1 hour time frame, what is my bias? Am I looking for a buying opportunity or am I looking for a selling opportunity? Wavy says buys. Yep, Wavy says buys. And how many times have we been back in our trading, right? Where we don't have a specific process. And what do? We begin to try to build a case for why we should look long or short, right? Analysis paralysis. For me, I could say, hey, look at these two last daily closes. We had the daily close Monday. We had the daily close Tuesday. Look at that big selling momentum. I now want to look for a selling opportunity because of the way I analyze these candles, right? Because of the way I'm analyzing these candles. That is what? That is me making an analysis. That is me making a decision and not my systematic process. My systematic process tells me no matter what's going on, if I'm trading at higher time frame support, my bias is bullish. My bias is bullish, right? So it's not me getting caught up trying to make a decision here, using the systematic process to tell you what to do and when to do it. So I'm dropping down the 4-hour time frame with one bias in mind, and that's a buying opportunity. All right. Unfortunately, we didn't have near as clean of a push here, right? We didn't have near as clean of a push. We had some momentum change here. We had some momentum change here. So there's probably not going to be an opportunity to look for a buying play here. Dropping down the 1-hour time frame. Yeah, nothing really here. So nothing really here, Big Ruben. I want to look for a buying opportunity, but based off the push here, right? Think about the difference between this one and US 30, right? This one, we did get a push, but it wouldn't be any area to take off targets, right? Because if I'm telling myself, hey, I want to look for a buying opportunity at this level of support, I'm trying to find where was that last place the sellers were interested to get out of the market, right? It's going to be right here. So there's not going to be any room. You can see the sellers push price down, buyers pushed it up, and then sellers did what? Push price back down. So here's why I'd have to get out of the market, which is why there's just no room to go here, right? So once again, doesn't mean just because I anticipate buying pressure, I can trade the buying pressure I anticipate. Let me say that again. Just because I anticipate buying pressure doesn't mean I can trade the buying pressure I anticipate, right? It's got to follow a systematic process. And here, there's nothing I can do with it. Nothing I can do with it. So nothing I can do here, Big Ruben. All right, I'm going to move on to the next now. So a couple things I want to talk about. Let's stick around the concept of structure-based trading really quick. I think this will be something that you guys can take into your trading. So this daily time frame. Zooming at my chart. Once again, guys, let's keep this as simple as possible. We're trading where? We are trading at higher time frame resistance. We are trading at higher time frame resistance. So somebody tell me in the chat, once again, please, if we are trading at daily time frame resistance or a previous area where sellers were interested, right? They push price down here. The next time we come to this level, you guys think I want to be looking long or do I want to be looking short? And I know this seems so basic and so repetitive, but if you've ever had a trading career, if you started to trade, I can promise you've probably been through a similar stage like this, where you would have analysis paralysis, where you couldn't decide what to look for, right? Because once again, I can say, hey, 1, 2, 3, 4 days with the previous bullish candles. Right now, I think all this bullish momentum is coming to the market, so I want to continue to look for a buying opportunity. That's what? That's me taking the last couple candles, putting my opinion into the market to try to make a decision, right? Opinions don't pay the bills. It's all about creating that systematic approach. Ruben says short. Jonathan says short. I'm looking for a selling opportunity. All right, so this is where it really gets testy to follow your rules. Let me show you guys this. So I've got 2 clues for a loss of bullish momentum. I've got 2 clues that shows me a loss of bullish momentum here. Can anybody think of what it is? I've got 2 clues that shows me a loss of bullish momentum. Two clues. All right, clue number 1. Let's just compare the moves. Keep it simple. There's one move. Here's a pullback, and here's the second move. Right? Good, Jordan. Smaller pushes. Yep. So look at the size of this move here. Right? Compare the size of this move here. See what I'm saying? We made a bigger push here, and then we made a smaller push. So just keeping it very simple, we did what? We lost momentum. Right? We lost momentum. What is the second clue for a lost momentum? A deeper pullback. What do I mean? Look at this very shallow pullback right here, right? Based off this extension, let me change the colors. You can see a very shallow pullback based off this extension right here. All right, look what happens next. We've got another decent push. That was a smaller push, right? Which shows us that lost momentum. And then what happens to the pullback? What do we have here in the pullback? We have a deeper pullback. And what do we know? Historically, what? The deeper the pullback, the weaker the trend. The deeper the pullback, the weaker the trend. right? So I have two signals that are showing me a loss of potential buying pressure, aligning with what? That higher time frame resistance, right? So the story's aligning for that lost momentum. So now for me, all I have to do is what? Wait for that entry signal into the trade, which once again is one of two things for me. It's either going to be a double top, that's going to be that relief pattern, or it's going to be a head and shoulders, that's going to be that reversal pattern. Okay. A double top for relief, a head and shoulders for a reversal. Neither one of them is here right now, so I can't just enter the trade, right? But the point of what I wanted to show you guys in this one, I don't know if you just heard heard the little dogs. Yes, it's great to see you back, my brother. Thank you, man. Great to be back. Great to be back. But the point of what I wanted to show you guys all this for was that from a common sense standpoint, right, we can see a lost momentum. We can see potential selling pressure coming into the markets. And what does that do to me? Right? It makes me be all confident in my mind and start to anticipate what? Selling pressure. But what I cannot do as a professional trader, what can I not do? Enter based off emotions, enter based off of opinion, right? I'm not going to enter the market because of the way I'm analyzing what's going on. I'm waiting for one of two things. I've already told you the two things I'm looking for. If one of those things, two things show up, I'm going to enter the trade, close my laptop, and completely move on. Right? Neither one of them is here, so I have to move on to the next. Okay? Let's move on to the next. Dougie says, do you wait on a retest on a double top? No, sir. I'm just a traditional top entry. So if I get something that looks like this, have them in a push, pull back a structure, retest right there. That's all I'm looking for, and I'll enter right here. So it says, do you trade order blocks in supply and demand? So I guess you could technically say I trade supply and demand as far as like zones of structure and when I want to get out of the market. But I don't necessarily, I just call it all structure. It's all structure in my opinions. I know that sometimes people view supply and demand as like bigger zones, broader zones, right? So I just kind of incorporate all to the same things. And in terms of order blocks, no, I do not. I was interested in looking into order blocks really going into, I guess, 2020. And I found it was very hard to create a rules-based approach for my identification of the order blocks. And if I can't create rules around what I'm looking for, right? If I can't create rules around what I'm identifying, to me, it wasn't worth trying to create a system around it. Because if I was to trade it live, I would be shaky because I couldn't consistently identify what I was looking at. So I definitely think there's value in them, but I personally didn't trade them because I couldn't create rules around how to specifically identify the pattern. Okay, good question though. All right, so that's the example for dollar Swiss and lost momentum. Once again, I hope that for you guys was, wouldn't that be a valid double top already? Dougie says, no, sir. So let's go over some rules for a double top. Who knows the rules for a double top? Who knows the rules for a double top? Either if you're in Bish Capital, you should know them, or if you've been through the webinar below. And you can also click on the link below to go through the webinar. Now, so it's going to be invalid for a couple reasons. So first thing we need for a double top is a high momentum push, which neither one of these is big enough. Second thing we need to do is go overbought on our RSI. Third thing we need is to come back, retest structure, provide a gap between the pattern, which we did get a gap here. Retest structure, show some RSI divergence, and hold through this level. Also, we cannot touch a 3-2 retracement. So if I was to go swing low to swing high here, can't touch a 3-2. We do here. So that's kind of what I'm saying there, Dougie. I've got 6 rules that is going to classify what is a double top versus what is an invalid double top. And that's kind of the same thing as I was saying towards like order blocks. I couldn't put 6 rules around how I identified order blocks. And if I can't put rules around how I identify it, I can't trade it systematically. So I've got 6 rules that has to check in order for it to be a valid double bottom or double top. Here it wasn't one. So that's kind of a structure-based trade. But let's talk about momentum, right? A lot of times we get caught up and so fixated in just one thing. But luckily now here this week, we've had some good high momentum pushes going on, which has provided some potential free space. So I'm going to break this one down here. This has been one of the bigger trades I've been looking for all week. Just hasn't got entry into it yet. But we'll see what happens. And then here in a minute, I'll break down the one I just lost. You guys must have gave me bad luck. It was like a minute before I started the dang call. Lost the trade. All right, so this is going to be a little bit different bias, right? We haven't had this bias yet. Aussie, okay? You're Aussie, daily time frame. First thing we need to do is what? Identify our zones of structure. Because if we can identify our zones of structure, we can identify what? What is our bias, right? What is our bias? So first thing, let's talk about major support and major resistance. We've got major support down here. I'll make it green. And then we've got major resistance up here. Let's make this one all the way red. All right, so there's my major zone. Here's my major zone. Let's color this up. Let's color this up. All right, so I've got to look at look at the most recent push and ask myself, do I see any minor levels of structure? When I say minor levels of structure, all that means is it doesn't hold any value to the trend, right? It might show me potential selling pressure. It might show me potential buying pressure. But if we break one of those levels, it doesn't affect that higher time frame trend, right? Which is what right here, you'll see what? Somebody in Bishop Capital, tell me what this is. What is this? And I'll break it down. This is a level of minor resistance. Let's talk about why. So we push down, push down, push down, push down, push down. Saw some buying pressure here, right? Did what? Pushed up. And then what happened next? Melted back down, right? So this is actually the last place of what? The last place we were clued in for selling pressure into the market, or what Jonathan says, lower time frame consolidation. Exactly, right? So previously we saw some conviction in that little level there that showed selling pressure. So for me, that's going to do what? That's going to tell me when to potentially get out of the market as a buyer, right? So let's come down here a little bit closer now. What has recently happened? We have recently broke above what? Minor time frame resistance. Zayed says supply. Yep, same thing, right? We've recently broke above what? Minor time frame resistance. All right, so this is kind of different than what we've been doing, right? But let's break this down. If we just broke above minor time frame resistance or the minor time frame selling pressure, that gives us what? Potential inclination for buying pressure coming to the market to make a next extension to the upside, right? So different than the structure-based trading, this is the opposite. We've just broken through structure. So now I want to look for what? I want to look for a pullback and a next extension in that direction, right? So dropping down the 4-hour time frame, I have a bullish bias. I have a bullish bias, okay? Now let's talk about what's going on here. So when it comes to trading, right, you have to have a philosophy. For me, my philosophy is that structure is the most important thing. And what that means is I believe that structure is important for targets, for creating my bias, for replacing my stop loss. And then I always believe structure is a magnet. So I believe if we break a level of structure, we're going to come back and retest it at some point, right? So here was that daily time frame minor resistance that we broke above with this extension. All right. So I call this, just keep it simple. Here's a red light move. There's a red light break of structure. All right. Now, if I have that structure belief, that structure is the main point of my philosophies, what I anticipate is that price is going to retest structure before making that new extension, right? So what I call it is a battle zone. I want to mark off my battle zone where I'm looking for that pullback into, okay? So here's that next level of structure right here, or for me, the battle zone, right? So all I'm looking for now is a continuation in this pullback down into this zone, what I call is a yellow light move, right? Caution. Red means stop, yellow means caution, green means go. I've been looking for some type of green light price action opportunity to get long here, right? Now let's talk about two different types of targets, okay? One target is going to be the most conservative target. Before I draw it out, why don't you guys talk about it? What do you guys think is the most conservative target if I can look long here, which I plan on doing hopefully tomorrow if I get a chance. But what would be the most conservative target to get out of the market? What would be the most conservative target to get out of the market? Jordan says the high of the last push up. Yep, right here, right? Because why? That represents selling pressure, right? Represents selling pressure. It says top of recent minor resistance. Them boys on vacation still getting in that work. I hear you, B. I hear you. Good, Marshall. This is just like your system, right? A little bit different just in terms of the time frames. But this is going to be the most conservative target right here. This can be the most conservative target. Andy says last high too. Wave says most recent high. So everybody's on the same page, right? Here's going to be that most recent conservative target. Now, let's talk about the aggressive trader. Person who looking to go what I call zone to zone or trade the free space. Zone to zone or trading the free space. Let's go back to that daily time frame. All right, daily time frame. Let's say we get an entry right here, right? Here was that first conservative. Now let's think about this. Where's our more aggressive, longer term target, right? It's not just random. We're not going to say, we think price can go here. Based off this move, here's where price can go, right? We're not saying that. we're saying is we just broke above resistance. So now we want to look long to the next level or the last place the opposing pressure came into the market, right? In that last place, the opposing pressure came into the market is where? Right here, right? Based off that price action clue of that push down, push up, and then melting back to the downside. So extended targets on this one is going to be where? To the free space, trading all this clean traffic. Some people call it clean traffic, right? Trading this free space because there's no inclination of any extra selling pressure coming in here until this level right here, And Jonathan says 156 flat. Yep, that'd be a great front run right before it. 156 flat. It says place stop loss at entry and continue the swing. Yep, so that's what I would do. So my first stop loss is going to have to be below this structure, and let's talk about why. So let's say we do get that pullback down into here, okay, and I get that 1 hour entry candle. Looking for is a battle candle, higher high, higher close. Okay, for me, I have to have a stop loss protected below structure. I have to be protected below structure because, in my opinion, it's not just a random 10 pip stop loss. Right? I hate when people do that. People just put, hey, I do a fixed stop loss of 20 pips. It's like, what does 20 pips have to do with this trade? Right? You're just basically placing a certain buffer around your stop loss that you think is enough, right? Where to me, I want to put my stop loss in a place where my analysis is wrong. And here's what I mean. If I get long here, right? Technically, my analysis in terms of the bullish momentum coming is not wrong in violate the last place the bullish momentum was. So unless we break through this level of structure, I'm still looking bullish. So it just never made any sense to get long here and have a really tight ass stop loss right here. Because if we get stopped out on the tight stop loss, my bias is still the same. I'm still anticipating that bullish move, right? Which once again, going back to philosophies, that's why my philosophy is the most important thing. I want to have my stop loss protected by structure, because if we break that structure, then my bias changes. So I don't just have a random stop loss placed in the middle of nowhere. My stop loss is always placed in a position where if it's hit, I am just wrong. I am wrong on the direction of the move. Give me some yeses or nos if this concept makes sense, please. Give me some yeses or nos if this concept makes sense about structure protected stop loss compared to fixed pip stop losses. Does this concept make sense? Yes or no? And then we'll move on. Bronson says yes. Jonathan says yes. Ruben says that helped a lot. Good, man. And Ruben, you're brand new, bro. So you're gonna be drinking from a fire hose here shortly. But when you start building out your system and start putting rules to what you're doing and start, once again, like I talked about last week, it's not necessarily are the rules the best in the world, but do they make sense? Right? We're going to build a plan that makes sense for why you do what you do, get you in a place where you can consistently identify what you want to do, and then create a system around it and go test it. Dougie says, 100% with you on that. Good. Wavy says, and if you're not comfortable having your stop loss below structure, then you're not managing your risk correctly. Exactly, Tremaine, because what I have found is time in my gut, right? I had that gut feeling or that excitement to want to have a stop loss tighter, right? It wasn't because I thought that was a great place to have the stop loss. It was because I wanted to take a fatter position size, right? It was my risk, my greed, and my want to say, hey, this is the trade, right? This one's clean as can be. This is the trade. So I want to have a tighter stop loss to give me a bigger position side on this trade, rather than looking at my trading from a probabilistic mindset, saying, hey, this one looks good. It looks clean. It's got confluence. They talked about it on the news. But guess what? The outcome's still random. So I'm going to follow my systematic process. Dex, what up, man? What's happening? Jonathan says, potential bullish cipher if price can come down to the 147s. I believe Jonathan's looking at, let's see, cipher from, here to here. So only thing for me, Jonathan, is that my X, I'm very picky, kind of similar to Akil. I'm very picky on my X to A's, and this would have been too much wiggle between here to here to make this a valid X to A leg for me. But I definitely see your view of this being a move and this being a move. So as long as your eyes see that, you're good, man. Good. And that would be also another good where the pattern, right? The buying opportunity is at a great location of support. Great location of support. Deck says, calling it a checklist before entry, taking part in a trade. Absolutely. If you don't have a checklist that you have to go check every time you either enter a trade, exit a trade, manage a trade, or do anything about the trade, guess who's in charge of that trade? You, not the system. If you are in charge of that trade, you are going to be emotionally attached to every trade you take because you believe you're the one making the decisions. Right? If you can put the blame on a system, if you can rely on the system to make the decisions, the system to tell you what to do, that'll be the way you can handle the drawdowns. That'll be the way to take yourself out of it. And that's the way that, in my opinion, you can scale the money you manage, right? You can scale the money you manage because then you can look into it in percentages. If you're making opinions based on everything you do, it's going to be a lot harder to not be attached to the result of each individual trade because you believe you made the decision about that trade. Right? Compared to saying, hey, I've got a statistical edge. This trade meets my edge. I'm going to click the button and then follow my systematic process after that. Okay, let's move on. All right, let's go to the trade I lost today, and I'll talk about some of the trades I'll be looking for. Let me just check this one real quick to see if we're getting in here, and then I'll go to the one I lost. Okay, all right, I'll break that one down in a second. Let's go to the trade I lost earlier today. And why am I not scared or ashamed to talk about losses? Very simple, because I don't take the blame for them. I could care less about talking about losing trade with you guys because I don't take the blame for it. I don't take the credit for the wins. I don't take the credit for the losses. This is irrelevant to me. And if you judge my skill set based off a loss, you'll never make it. You'll never make it. All right, but actually, let's do the full analysis. Let's go full analysis. And if you were here last week, this is an advanced pattern. We all started talking about advanced patterns. And you'll see here with the structure, once again, my philosophy structure is going to incorporate with this. So zooming out, first thing we see is a bunch of bullish momentum, right? So just without doing a good systematic approach, I say, hey, let's look bullish. But let's zoom out our chart, go through the process, and see where we're really trading at. I'm zooming out my chart. And what do we notice? We are trading where? At big structure highs from December 2016. So now I've created what? A selling bias, right? I want to look for selling momentum. Now, once again, let's be very clear. We're not looking for a move that does something like this because we're not looking to make a huge reversal off of all this momentum, right? What we're looking to do is catch the relief or that exhaustion from that big momentum, right? Let's think about it. If you're somebody who, runs a marathon and you just crushed it for 10, 15 miles, whatever it was, you're probably going to slow down your pace at some point, right? Or maybe not, because I'm sure at a marathon run, you probably have a good pace, but just think about that concept, something that runs into a bunch of momentum, into a wall, right? Here's that wall, steep momentum. At some point, we're going to bounce off. Now, we're not going to bounce and completely change, but we'll bounce and then maybe continue. So we're trying to catch that little bounce off a structure, right? So dropping down the 4-hour time frame, I was looking for a double top, a double bottom, a double top, or head and shoulders, and we ended up getting a bat pattern here. I'm going to go to the 1-hour time frame to explain what it looks like more. All right, so here's that how I'm going to push to the downside. We then got some relief. We came back down, tried to retest structure, came up, and completed the bat pattern right here. So I got short last night right here on this trade. Okay. I was short right here. My stop loss was right above here. So I went through a little bit, and I was looking for a move like right about there. Went through a little bit of drawdown, went into some profit for most of the night. Went into drawdown, came up this morning, almost in profit again, and then boom, immediately came in reverse and stopped me out. So we got very close, didn't hit it. But here's the concept here. What I want you guys to take from, once again, where is my stop loss? Somebody tell me, where is my stop loss? Where is my stop loss? Because this comes down to philosophies, right? Where is my stop loss? Somebody tell me. What do you notice about my stop loss of this trade? Jordan says above structure. Yep. So my stop loss is above this level of structure, right? We had some selling momentum come right here. Push price down. Push price down. So I have my stop loss where? Protected above structure. Protected above structure. So at this point, if you take anything from today's live stream, I want you to audit your trades. Either audit your system or audit your trades and ask yourself, is my stop loss in a place where I want to put it because I want to take a tighter position size? Or is my stop loss in a place where, hey, if my stop loss is hit, my analysis changed. I was just wrong, right? I was just wrong. And that's why, once again, I am not interested in having a stop loss anywhere within this zone. Why? Because if it gets hit, my bias hasn't changed. I'm still looking short, right? But if it's above here, okay, if it's above here, boom, and then it gets hit, I was wrong. My analysis was wrong. My system did not exploit the edge here. Whatever, move on, right? Move on. Now, Ruben's. Ruben says, is bat pattern basically a W placed in support? So, I mean, it looks, it kind of looks like a W, you could say, but there's going to be 1, 2, 3, 4, 5 rules that go into it. So long story short, here's the extension. And I'll just do this really quick, Ruben. The first thing has to happen is this is my clean extension, a clean what we call X to A leg. Okay, then we have to have an A to B. A to B must touch the 50% without touching the 61.8. If we can touch the 50%, we then have to come back down, touch the 382, and then complete at the 886. So once again, let's think about this. I have a rule for this leg. 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 And then if I am in the trade, I have rules for how I have to manage the trade. So I hope you guys can see that me getting involved in this trade right here had nothing to do with me thinking, hey, this looks good. This looks like a great selling opportunity. No, it met 1 rule here. It met 2 rules here. It met 3 rules here. It met 4 rules there. And then it met my risk reward requirements for 5. Right? So a systematic process to why I took this trade, which is the exact reason I can lose this trade, show it publicly, and then take another one if it shows this afternoon. I could care less because I am not making the decisions. It is a checklist of rules that systematically tells me what to do. Jose says, bro, I haven't seen you for a while. Hope all is well. I know, man. It's been a while since I've been back doing the content stuff. Just got a bunch of that scammers and stuff going on, so I took a break, but I'm starting to kind of get it back going. So I'm glad we got to connect again. Dexter, bless you. Thank you. Andy says, do you use ATR or else to define the distance for your stop loss above structure? So for my advanced patterns, I use the 113 inversion. And so you can either put it on your Fibonacci retracement tool, or you can just do the inversion of this stop right here, or of this extension right here. So I use the 113 inversion to find that stop, and it's not on right here. I'll show you. Style, where is it? 113, right there. Yeah, so it's right there. So that's how I use it for advanced patterns. And then for any structured trade or free space trade, it's always an ATR. It's always the average true range. So I'll take an average true range if it's a pullback off the low of my pullback or the high of my pullback. If it's off a double top, I'll take it off the high of the pattern. If it's off a head and shoulders, I'll take it off the depth of the pullback. Okay, depth of the pullback. So really quick, I'm going to break down 2 more advanced patterns. I want you guys to stick with me. This is the one I'm looking to get involved today. And I know a lot of times when you see advanced patterns and stuff, it's confusing. It doesn't make sense. It looks like a bunch of gibberish. So if you're not familiar with advanced patterns or anything like this, I hope what you're able to take from this is the concept of probabilistic trading, a systematic approach, and how I'm able to take the pressure off of me as a trader. Okay, I'm able to take the pressure off of me as a trader. So I'm looking for a Gartley right here. This is a little bit different than that pattern, very similar, but it's called a Gartley. All right, so here's that X to A. Here's that solid momentum right here, that clean push. So X to A. Okay, then we have to come down, touch the 61.8. You see we touched 61.8. So now I have 1, I have 2. Okay, next move, we must come to the upside and touch 61.8. What do we do right here? We came to the upside, touch the 61.8, and now the completion of this pattern is the 127 extension from A to B. So I come down here, take an extension from here to here, and this pattern completes at the 127. So actually I might get in this trade here in a few minutes. So the 127 right there. So if price touches this level, I've got orders that are sitting here waiting on getting me involved in this level. So I'm gonna get long right here, hopefully sometime soon. And once again, where's my stop loss going to be? Protected by what? Protected by here. If we trade below this level of structure support, I am no longer what? I am no longer interested in looking long because we broke through the level of buying pressure, right? If we broke through the most previous historical level of buying pressure, I don't want to look bullish anymore. That's not giving me a good signal to look long. It's not giving me a good story that the price action is telling me, right? So this is a systematic approach. And so what I want you guys to see from this is that it's repetitive, right? It's testable, verifiable, and repeatable with rules. So create something that you can consistently identify, create a system for how you want to trade it, go collect the data surrounding it, and then act on that edge if you have a statistical edge. Okay, so that's the pound dollar. And then euro pound. Notice this, guys. It's the same exact pattern on a completely different pair. Same exact pattern, just on a completely different pair. Okay, look, now it's the opposite way. Remember the other one I was looking bullish. This one I'm looking bearish. Why? Here's that X to A. Here's that A to B. Here's that B to C. Now, what we got to do is come up here and touch that 127. If we do, the pattern would have met all 5 rules. I will look short for a little bit of relief right here. Not a big move, looking for something like this. Small bit of relief. Structure-based stops protected above what? Protected above resistance, right? Protected above resistance. So that's the process of taking advanced patterns. And once again, I hope what you see from this is the process of how structure is still incorporated in these advanced patterns because it's built off my philosophies of my stop loss. I hope you see the 5-step checklist that this has to meet before I even enter the trade. And then I hope how you can also see how these are testable, verifiable, and repeatable if you can identify the rules. Okay, if you can identify the rules. All right, now we've got about 10 minutes left, and I want to leave this part open for questions about anything I just talked about or any pairs you guys want me to go break down, whether it's a stock chart, commodity, crypto, Forex, whatever it is. You know, let's leave this as a chance for you guys to see some analysis. And it might be something I don't trade or something I do trade, but you'll see that it has nothing to do with me, the way I'm going to approach it. It's going to be still based off a systematic process. So I'll give you guys a few minutes to type in some questions or some pairs you guys want to see. And if there's nothing that comes through, we'll call it a day here shortly. But we'll see. Maybe I can get involved in this pound dollar trade where you guys are here. Close. We're close. It's got to touch this 127 for me to be involved. Got to touch that 127. Jonathan says, good to have live rooms back up and running. Catch you next time, bro. Take care, man. Enjoy the day, big dog. Enjoy the day. Dougie says, have you analyzed the euro dollar? We have not. So let's get into it. Let me see if I had anything on my radar for euro dollar today. Didn't have anything coming into it, so let's do it. Something else, I like to always keep you guys involved in kind of what my journey is like as a trader and how I'm looking to turn my trading into a business and other things like that. Obviously, I've got the coaching business now underneath Fish Capital, right? So if there's something you're interested in, click the webinar below, watch the overall webinar on what the program is like. It'll kind of give you a better example. And you can see really what it means to be a systematic trader and what it would look like to do it full-time in terms of collecting the numbers and building a business you can scale. Now, when it comes to some of the future things for me, one of the things I'm looking to do is run a hedge fund, right? I want to launch a big $50 million fund here over in a couple years. And some things I've been looking into is some research, right? Doing some research on what it's like to start a fund, what that process would be like. And some of the things I've been looking into is building a public track record with basically other people's money. And this is going to be something that I've learned from a guy named Bridger Pennington. If you guys want to YouTube him, he's called it's called, what is it? The Investment Fund Secrets. And what he talks about is similar to a real estate syndicate. They do a fund syndicate in these markets as well, where basically you create an LLC, right? And let's say I'm going to take 23% of the pie. Okay, I'm taking 23% of the pie. I'm not bringing any capital because I'm bringing the skill set, and I'm looking to raise $1 million. Okay, so if I look to raise $1 million with 23%, there's 77% left of equity in the company. So I'm going to raise some money. Obviously, is not near enough to do this, from a hedge fund standpoint, but it allows you to take in public money from, or not public money necessarily, but from somebody in the syndicate with you, from somebody that's a partner with you, trade for 6 months, 9 months, a year, whatever it is, get that record audited, and then you can have a audited public track record that shows, hey, I've taken in an investment, I've traded these numbers over X amount of days. Now let me go use this to go build out a credited fund, to set up that general partner, limited partnership, right? Then go raise money and maximize it. So what I'm looking to do for my future is start a fund syndicate, create that public track record first on a small sum of money, maybe $1 million, whatever. Take that, go raise 10 million, right? Trade 10 million for a year. After I trade the 10 million, take that record, go manage 50 million, right? Take that 50, take that track record, go try to get to 100 million, whatever it may be, right? That's kind of the journey that I'm looking to do moving forward. So there's a bunch of different things you can do with the skill set if you have the skill set, right? If you have this skill set that is systematic, it takes the pressure off of you, it is scalable. Whether you start your own trading business, whether you go work for a prop firm, whether you get your Series 66 or Series 7, whatever it is, and start managing money, whether you do the fund syndicate, whether you sell a signal service, whether you sell a course, whatever it is, there's plenty of business models outside of the skill set if you have the what? If you have the skill set, right? All right. Dougie says, if you analyze euro dollar, Zayed says, can you analyze dollar Canadian? And then Dougie says, do you think it's a good idea for me to only trade one currency pair? I would tell you, Dougie, has nothing to do whether it's a good idea or not. It would have to do with what does your testing tell you, right? What does your testing tell you? Because what most people are going to do is they're going to say, hey, I'm going to pick one pair and I'm going to get really good at this one pair. And what that means is you're thinking that you're getting good at that pair based off the way you analyze that pair. And you have to get out of that mindset. You have to get out of the mindset of trying to analyze a pair, right? If you're trying to get better and master one pair, like I said, you're trying to be able to get in the zone and feel the flow of that market, of that pair based off your opinion and based on what's going on. You have to go through the process of back testing. You have to go back test one pattern first over a bigger portfolio of pairs, right? Then shrink that down to now 2 patterns over that same portfolio, shrink your portfolio from there, move on to 3, keep shrinking, move on to 4, keep shrinking, whatever, right? So do I think it's a good idea if you only trade one currency pair? If you've tested 6 different strategies that apply to different market conditions and one pair is the best that you can do to maximize that edge, absolutely. But if you're picking one pair, trying to become a good trader by learning how to trade this one pair because you want to analyze it better, then no. You're going to go through a circle of doom. You're going to catch yourself in a hole. And I think that if you could think about the concept of managing $100 million off of your opinion compared to off of rules, you'll be shaky, right? You'll be shaky. So what's scalable? Rules and systematic process. All right. Daily time frame. Euro dollar, this will be quick. There's really nothing going on here. So let's do 2 things. Number 1, let's mark off our structure support. Number 2, let's mark off our resistance. Keeping it simple, right? Keeping it simple. Actually got a little bit of a wick right there, right? So what does that represent? Price went down, came up, down, up, and then melted again. So I'm going to include this in my box. I'm including this in my box. All right. 4-hour time frame. Nothing going on. We're in the middle of the 2 zones, right? So looking for a consolidation pattern, which once again is an advanced pattern, right? Unfortunately here, there's nothing going on. Nothing going on. So going back to the top, who was it? Asked this, Dougie. Here's all I can do. Write down in my journal. Euro dollar, trading in the middle of zones of structure. No advanced patterns on lower time frames. So I really have nothing to look at for the rest of the day on this pair. I maybe check this at 4 o'clock this afternoon when the pair is done. And the 2 things I'll be looking for is to be trading at resistance, looking for a double top. Come back down, trading at support, maybe looking for a double bottom, right? Or looking for a head and shoulders, something like that. So based off the way this pattern is, or this pair is set up so far, nothing I can do here. Nothing I can do here. Now, I don't want to force an analysis to make it look like I'm looking for something. I'm not. We're sitting in the middle of nowhere. It's showing me a bunch of junk. Nothing I can do. Right? Nothing I can do. All right, let's go check out dollar Canadian, and then we can call it a day unless anybody else wants to type in a couple questions or some last-minute pairs you guys want to see. Last-minute pairs you guys want to see. All right, I've already got some resistance marked up here. I've got some support here. I've got some support here. Let's look at this chart one more time and see what else we got. All right, we got a hidden level. We got an obvious level of resistance right here. Let's make it minor. Let's turn it blue. And then we've got a hidden level right here. Why do I call it hidden? Because it necessarily doesn't stand out, but if I read the story of the price section, it's going to show me everything I need to see. Price pushed up to here, price pushed back down to here, and then popped back up to here. So if we popped back up from here, what does this wick right here represent? Somebody tell me before I zone it out. What does this wick represent? Somebody tell me, what does that wick represent? Dougie says, sounds good. That makes sense. Yeah, man. All about systematic approach, right? All about probabilities. And so I just think that that approach to taking one pair, you're taking that approach as if you can become a better analyzer on that one pair, right? Information and becoming a better analyzer does not mean you become more profitable, at least in my opinion. But somebody tell me, right? What does this wick represent? What should I do with this wick? It doesn't represent selling pressure. It represents what? Buying pressure, right? Or bullish momentum popped. Once again, we went up, came back down, popped, right? Popped to the upside. Yeah, sure, Hazy, that works. Exhaustion to the downside, right? So for me, I'm going to mark this off as what? Minor support, because it shows me buying pressure, right? Now, it doesn't look as obvious as something like this, right? There's no V bottom to it. But if I take each candle as their own and I look at them one at a time, it can tell me a story, right? And the story of this candle with this candle shows me selling exhaustion, and then boom, buying momentum. So the next time we level, I want to look for a buying opportunity, dropping down the 4-hour time frame. First thing I'm looking for is that good high momentum push, right? Unfortunately, with this one, we kind of separated it. We had here and a decent one here. So what I can do right now is mark off at least this level for what? Potential target placement, right? If I get that buying opportunity down here, here's at least, or I want to get out of the markets. Because what does this show me? Sellers pushed down, buyers pushed it up, sellers pushed it back down. So if I'm getting long here and I want to get out of the market to the next level of danger, or the last places sellers were interested, where is that level? Right here, right? Right here. So let's go to the 1-hour time frame and see if there's any buying opportunity. Nothing here. No pattern. So once again, here's the difference. This is kind of the pattern we had earlier, similar concept. We've got our location is good. Our structure support is good. We've got good momentum. We've got good clean pushes here, right? We've got an area where we want to take off targets, but what do we have? We don't have a pattern that allows us to enter the trade. And if we don't have a pattern that allows us to enter the trade, I'm not going to emotionally enter this trade because of my opinion on what I think is going to happen. Right? I'm going to sit this one out and wait on my pattern to show. Once my pattern is there, I'm going to click the button, execute my edge, and get out of the way. Right? And get out of the way. And really quick, let's talk about this. So remember, I said this was buying pressure, right? I said this was buying pressure. Look at this story here. When you look at it from here to here, it just doesn't look like much, right? It looks like a wick right there and a wick right here. But watch what happens when we drop down time frames. Look at what it looks like now. That's the same move. Push up, push down, and a pop, right? This right here on the 4-hour time frame is represented by what? This right here on the daily time frame. And that's why it's so important to take your time with your analysis and take note in every detail provided, or you can miss things, right? I might not have been looking long here because I didn't take note in these details. And if I get a buying pattern here, I might not have took it because I wasn't looking bullish, right? But if I go through my process step by step, take my time, it's going to tell me what I should do and when I should do it. It's going to tell me what I should do and when I should do it. All right. Anybody got any last minute questions or pairs they want to see? Anybody got any last minute questions or pairs they want to see? Anybody got any last minute questions or pairs they want to see? Then we'll call it a day. Close. So got a little bit of room to go, but I'll be getting long right here if we touch that 127. I'll give you guys a few minutes here for any last minute questions or any pairs you guys want to see, whether it is, like I said, Forex, crypto, stock, whatever. We can break it down, or any questions in terms of target placement, entries, stop losses, trade management, compound interest, back testing, rules-based approach, multi-time frame analysis, anything like that. I'll give you guys another second to come through with some questions. And if no questions, let's at least hear who you guys got for the for the March Madness. Who do you guys got winning the tournament? If no last questions, let's hear what you guys got. I got the Memphis Tigers, baby. I got Memphis playing Auburn, I think is what I got. Dougie says, how do I get accepted to your Facebook group? So it should be a link in the click the link in this bio right here, and then I can accept you later on this afternoon. Hazy says, gold. Dex says, news have no impact on your trading. FOMC in particular for today. Dex, I couldn't care less about news or any sort of fundamental process. And here's why. My beliefs is all about the backtesting process. The backtesting process is about collecting data on a pattern you see and a system you build around that pattern. And when I'm collecting data, 6, 8, 10 years of data, whatever it is, and I'm taking these data points in these trades, two things. Number one, I have no idea what was going on in the world, what news event was coming out, what FOMC conference, what monetary policy when I'm taking when I'm collecting the data of these trades. I have zero clue, right? So I don't want to start putting in that thought process into my brain when the data I collected had nothing to do with it, right? That's number one. Number two, what I have found about fundamentals is that you have to understand when it comes to fundamentals, it's not the fundamental event that comes out. For example, if there's a monetary policy statement that comes out, it's not the statement. It's not the statement itself that is going to move the market. It's the human reaction to the statement itself that's what moves the market. And so, for example, how big of a deal was non-farm payroll in 2015, 2016, 2017, 2018, things like that? Now, non-farm payroll, you don't really even see much stuff going on, right? How big of a deal was GDP back in the day? Gross domestic product stuff. Now, when it comes out, you don't really see any movements. You know what I mean? So the difference of what news events hold value in the time is all relative to what time of the world we're in and what's going on with that global economic health of the countries you're looking at. So to me, if I'm trading off a statistical edge that was collected and created with no thought process of what news events are coming out in the world, I'm not going to trade as if they matter, because I'm not going to try to anticipate my beliefs of how humans are going to react to the fundamental news events. Does that make sense? Now, if I'm an investor, right, and I want a dollar cost average over time, and I'm building a thesis for why I'm long or short on a pair, then yeah, fundamentals is the only thing you have to help you build that thesis, right? But I'm not an investor. I'm a trader. Dougie says, would you trade during election day? Absolutely. Couldn't care less. Couldn't care less. Worst I could do is lose a percent or a 0.5% on a trade. All right, I'm not over leveraged. I've got a good stop loss in place. Plenty of margin. Don't care. All right, don't care. Who's to say that the election is going to hold value to the markets? I'm not going to guess on my anticipation of the human beliefs and what they're going to show, right? What I'm going to fall back on is, do I see that? Do I see my edge? If I see my edge, I'm going to click the button, and I'm not going to think twice about what's going on in the global economic health of the countries that I'm trading. Why? Because it's not the events that come out that's going to move the market for me or against me. It's going to be an event that comes out. It's going to be a human reaction to that event that comes out, and that's what's going to move the market. And I have no idea what that human interaction is going to be. So all I can do is create a statistical edge through the backtesting process and then act on that statistical edge in the future trading. And Hazy, we did go in the beginning. There was really nothing there. We were just trading at some support. Any last minute questions, guys? Any last minute questions? Anybody want to argue the concept? Any last minute questions? Anybody want to go through a pair? Anybody got anything else? Or anybody want to argue the question of fundamentals versus technicals? Right? I know some people call them fundamentals, right? No, but I think there's a place for both. You just got to understand what is your placement for both. No problem, Hazy. All right, guys, ladies, seems like we are getting quiet. So it's 12:59. We'll call it an end to the day. If you guys got any questions, feel free to reach out. My only Instagram, once again, is Drew_Bishop. Drew_Bishop. So you got any questions about what we did today? If you want to argue with me about stuff I talked about today, if you want to go through any of the free trainings, click the link below. And if you guys got any questions, let me know. As always, great to see you guys. I'll be back doing the live stream next Wednesday at 12 p.m. Central Standard Time, and we'll go from there. Oof. So you all see this right here, right? Actually, I trade on Wanda, so let's see if we look the same way. There it goes, guys. Hit the 127, pop into the upside. Now, what I'm going to have to do, though, is on my other computer, log in and see if I got stop. Nope, I got some room there. All right, I'm going to let you guys go so I can manage this trade. Best of luck. Enjoy the day. Hope y'all be great the rest of the day.